Moving on the hot seat today, Namdev Finvest, a Jaipur-based non-banking financial company, has raised $38 million in debt funding. The funds were raised from leading development finance institutions like Developing World Markets, BlueOrchard-managed funds and Mirova. This infusion of funds will allow Namdev Finvest to expand beyond conventional lending models. Joining me now to discuss this further is Jitendra Tanwar, the MD and CEO of Namdev Finvest. Jitendra, thank you so much for taking time out and being here with us on Startup Street. Let's start with this funding round of $28 million that you've raised in debt, right? Can you tell us why the need for this debt funding and what do you propose to do with the capital?
So debt funding, so we have raised in MSME secured lending, and also we do for the electric vehicles and then the solar as well. So we are catering in tier 3, tier 4 cities with 120 branches with 9 states. So the fund will be utilized will be in the unserved and underserved areas in 120 branches.
Right. And through this funding, you're looking to go beyond the traditional domestic bank, NBFC lending models to serve the underserved and unbanked borrowers, right? If you could sort of elaborate on how you plan to do this and what's the plan on this front?
So as of now, so we are present in 9 states in North and Western India with 120 branches, and also we have entered in new states like Bihar and then UP as well. UP in Western UP, right? So we are catering in the smaller shopkeepers and then also FMCG stores, and as well as for farmers and then tractor loans, as well as the electric vehicles and the solar loans.
Right. 90% of your portfolio comprises of secured loans to MSMEs, while the rest of it is lending towards green and renewable segments, right? What will be the mix going forward, considering you've entered new markets and all of that?
So our company USP is a 90% is the secured, so 100% are secured lending. So 90% in the MSME, it's micro, small, medium enterprise loans, and 10% in green energy renewable loans and EV and solars.
Right. So EV and solars, are you looking to enter any new markets in the year to come?
Already we have started in Bihar and Uttarakhand and UP.
Any new sectors?
No, for the MSME and then the green energy only.
All right. And, your assets under management exceeded 1,100 crore rupees. 90% of your portfolio comprises of these secured loans, while the rest is lending towards green and renewable segments. What will be the mix going forward? Take us through, how you plan to grow this even further.
So in future, our 90% portfolio in the secured lending in the coming 4 to 5 years, and also in 10% portfolio already we will maintain in the green energy loans.
Right. And how have the books performed in terms of gross NPAs, collections, etc.? What sort of margins are you working with versus, traditional NBFC competitors?
So as of now, as of December, our gross NPA is 1.7 and net NPA is 0.6. And also our collection efficiency is 92%, 0 plus par is 9%. So we are maintaining our collection efficiency. So our customers paid on time on up to 90%, 90 to 90%.
Right. And, if you could sort of tell us what your growth targets are for this year. We've just started the year out. Are you looking to raise more funds? What are the big targets that you've set for yourself for this year?
So in this year, our total aim will be reach approximately 1,500 to 1,600 crores in this March 2025. And next year will be cross up to maybe 2,000 to 2,500 crores. Our aim will be reaching in 2000 up to 2026.
All right, Jitendra, thank you so much for joining us on the show today. But, we're completely out of time. Thank you so much for being here with us on Startup Street.
Thank you. Welcome.
On that note, it is time for us to head into a short break.